Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 25th of January 2017, and the trap we're going to take a look at today is what I call a structure failure trap, which occurred in this area here. Now, a structure failure trap is when you have a level of support or resistance in particular. It doesn't have to happen there, but it's nice if it does, where previous, in this case support, becomes resistance, and you get some semblance of a reaction off that level. So as you can see, the market started to head down. Now if you think about that in the context of this drop here, and indeed this drop in price, traders at the hard right edge, so the hard right edge is price in the here and now, so this is the hard right edge, and this would have been the hard right edge back at that moment in time. Traders at the hard right edge would have been very aware of this drop in price, would have been very seducing and inducing, and that's the type of price action that gets a trader interested in some price structures. It doesn't necessarily mean they're going to take a trade, but what it does is it heightens your awareness, gets you maybe doing some analysis, piques your interest, gets you interested in potentially looking to take a trade. And then from there, what a trader will tend to do is they'll tend to start doing analysis using some very common structures. Now what we've done over the course, goodness, well over a decade now, I think we're into our 14th year at this, we've deconstructed the trading strategies of basically every trader you can think of, and the way we've done that, thankfully, is that there aren't that many major core disciplines that traders are trying to attempt to trade on a daily basis. Now, there are unlimited strategies, and I accept that, but the actual core foundation, the core principles behind how a person enters a trade is very few in number. And what that allows us to do is that allows us to deconstruct, reverse engineer, if you like, their trading strategies, so that we can actually witness when these traders participate in, but importantly from that point, because without that we wouldn't be able to do it. Once we understand where they're participating, it's very easy, it's not a big step from that point, to understand when they're in trouble, when they're losing money. And what that creates is an order flow edge in our direction, and it also creates a psychological edge as well, because traders who are losing money are in a bit of trouble. They start to hemorrhage outside of the process. If you've ever had a losing trade, you know that to be true. So whenever you take a retracement trade, you've got to understand that the world really does want you to take those retracement trades, but it's not necessarily the best thing that you can do for your own financial health as a trader. So if you'd be interested in learning how to trade in the way that we approach the markets, then you want to click the link below, because my inner circle will explain all of these concepts in depth. They're not widely understood. I'm the creator of this stuff. I uncovered this over many years, trademarked it, you name it. So if you want to understand how to do it, you want to get it from the horse's mouth, then you want to click the link below and join me in my inner circle. So getting back to this example, traders would have believed that it was going to potentially follow through. Now the important part, so these moves are going to continue. The important part then is understanding whether or not there was some semblance of a reaction, and indeed, as we marked up, this was where that occurred. But no sooner did traders go into that short, they've been caught. Now since then, they've been in a lot of trouble up in that area, obviously, but since then prices started to come back. Now this is pre interest rate hike in the USA, which means that this is looking like a very reasonable area to do business, to buy US dollars, especially against the Canadian dollar. So fundamentally, although there's been some negative sentiment, I suppose in some ways relating to the US election, it doesn't mean fundamentally the US is weak. So if the interest rate had been 25 basis points before and we're back into those kind of levels now, then it makes no sense that we're at 0.5% interest rate and we're back down at those pre-hike levels. So this looks like a pretty good place to get long, and the reason why this also might be smart is because of these traders who are trapped in here. Imagine the psychology, if you will, for a moment. If you were one of those individuals, you took that trade to the to the downside, and imagine that price had started to come against you. So imagine that you probably placed a stop loss above this structure in here, or maybe you went above this structure. Okay, I would say the vast majority of people day trading would have been in the lower example in here. And imagine, so I'm just trying to show you that there would be a density of stop losses above there. People trying to get a nice tight entry, and then maybe a little bit more sporadic higher up and less so higher up, etc. And you place the stop, and you would expected the trade to follow through, and indeed it did do that momentarily. But as it reverses and goes against you aggressively, what happens at this point is this is where the trader will start to make mistakes. They'll start to question themselves. They'll feel the burn, right? They'll get squeezed. They're starting to lose money. So that then can talk a trader out of doing things like cancelling the stop loss, as an example. So the stop loss was there, but they actually nix it and cancel the stop loss because they just don't want to face the loss. And especially early on in the move as well. Like, humans don't like losing, but humans don't like losing and finding out they're wrong very quickly. And I use the word wrong very loosely as well, because unfortunately, or fortunately for us, unfortunately for the masses who try and trade, there is this wrong and right narrative out there. It's completely false, meaning you were wrong on a trade or you were right on a trade. You're never either of those things. And if you posit it in that way, what that means is that you feel very negative about the outcome. So if you find yourself in a trade and it starts going against you, you think you're wrong. You're not wrong. You've just taken a trade that isn't profitable. But because you think of it as wrong, and because that can happen early in a trade, you won't want to admit you're wrong that soon into the trade. So that will create the conditions for you to be more predisposed to cancelling your stop loss if it happens really quickly. And that's one of the effects of how traders get trapped and end up over in this area here on the chart wondering what the hell went wrong, right? Thinking, oh my goodness, what have I done? So we can understand that the way that humans behave in the financial markets with a fair degree of accuracy, and we can also, from that point, make some very reasonable logical assumptions. So if the trader was up in this area and holding on to that losing position, as it starts coming back into this area here, guess what their motive is at this point. Down here, it was all about making the money, right? When they entered the trade, they wanted to make some money. Up here, it wasn't about making money. It was about getting out of this alive, right? Getting out of the trade alive. Maybe they took too much risk. Completely devastated that they found themselves in that situation. Can't believe it. Nightmare scenario. But as it starts dropping towards where they entered, the motivation shifts to break even, right? They don't care really too much about making money. You'll get the odd individual who starts rationalizing again why they took the trade and that it might end up making money and go lower. But for the vast majority of people, that is not the way they would think. They've got the opportunity to get out of break even. The second best trade in the book is known as a scratch trade, a break even trade. So if you can't make money, then the idea is at least don't lose any money. So if you were indeed in that situation, which we know people are because humans are terrible with discipline. Just think about life more broadly. Terrible with exercising, not enough, right? Bad diets, drink too much alcohol, smoke cigarettes, take drugs, don't invest money, can't save money, spend money, blah, 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 blah. All the bad things that humans are really generally quite terrible at. If you think about the financial markets and add money into the mix, discipline goes right out the window. So I can bet my life that people found themselves in this situation from originally not believing that was going to be where they would end up. Right? If they placed the stop and everything was good in terms of process, the execution of the trade originally, it all goes to hell in a handbasket when they start cancelling stops and hemorrhaging out of the position. So I know that's what's happened to some traders because humans are terrible with discipline more broadly, and they become very predictable in the financial markets when money's on the line. So when this gets back into this area here, those traders are very, very motivated, but they're motivated for different reasons. They were motivated for a different reason in here. They were motivated for a different reason in here. In here, this is about exiting at break even. And if you if you were in that situation and you were a seller originally at the area where we suggest, right, if you sold in there, in order to exit over here at break even, right, the transaction you must execute to do that, to exit, is you must buy to exit. Alright, so that's going to create demand in here. Now there are several other reasons why there could likely be some demand in here, but this is forced demand. This is because these people made the mistake in here and then they found themselves in this nightmarish scenario, maybe took too much risk, and now they're coming back in. They can't believe their luck. They're going to bail out at break even as soon as physically possible, and that's going to create demand. Well, that's good, because we're going to have some help to move a multi-trillion-dollar market. We're not going to move it on our own. So the fact that people are going to be doing a certain action based on how and where they found themselves on the wrong side of a trade, if we can understand that, and if we can get that depth of analysis and understanding, then it puts us in a very positive position. So this looks like a great place to get long. Always watch out for news that can obviously always put a spanner in the works, but this doesn't look like a bad trade at the moment. You want to look for an entry. There's not one there just now, but this looks like an area where you might want to do some business. If you'd like to learn more about this very little understood trading analysis and strategies that I discuss in my inner circle, click the link below. If you like the content, hit like. I know you've got a trading buddy. We've all got trading buddies. We've all got Skype groups. We've all got trading forums. Do them a favor. Share the content with them. Share the link, and I'll see you on the inside.